Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, guys. Let's take a look today at the euro currency. So speaking on the cable, if you'll take a look at the follow time frame chart, the situation that we have discussed yesterday, indeed market is forming a kind of the double bottom, and it really could be double repo buy pattern could be formed. So our suggestion was correct, but currently, guys, actually the currencies mostly are hostages of the fundamentals, so some big data and the processes that we see right now in the global economy, because there's a lot of interesting issues right now. So first of all, you probably know that the 10-year bonds have broken the 3% yield level and have increased significantly. So the spread between the yields in Germany, for example, and United States bonds have widened. This makes the pressure on European currency, because it makes more attractive the trading and taking the United States assets and currency. The scary traders right now is ready to activate it, and this increase the attractiveness of the dollar. Although there are some really big process trends beyond this, because if you are monitoring the results of the auctions on United States Treasury bonds and notes, you probably should know that in recent time, in the last month, the demand from the external, from the international investors have decreased significantly. So this makes really difficult to serve the debt in the United States, and the spending expenses to serve the debt have increased for $200 billion in this year. So that's why the rising of the yield is the two-edged sword. From one point of view, it's really great for investors because the yield is rising and currency becomes more attractive. But this is good when the all other process stands intact. But when the yield is rising due to the lack of the amount on your bonds and decreasing of the purchasing of your bonds, this is quite another story. And currently, guys, it's not as cloudless as it could be or as it was in recent times. But right now we have what we really have, and in the first stages, at least right now, most opinion is that this is as usual. So it's interest rising, so it makes US dollars more attractive, and that presses on the euro currency. This is first question. Second question is a lot of uncertainty around the European Central Bank policy. It's currently absolutely unclear when the European Central Bank intends to rise the rate. What really is the assessment of the economy? So in general, European economy right now looks not bad, but recently it was some bit worse data than expected had been released, and that again raised the question what the assessment from the European Central Bank will be of the economy. You know, at the eve of the European Central Bank meeting, the investors contracted the positions. Also, here is a very important moment, because it's that right now, if you remember, we talked about it a lot, that euro positions right now are highly saturated. So speculators, majority of speculators stands long on the euro currency, and the net speculative position stands an all-time high. With the widening spreads in on the bond market, in the yields, it's really some hazard exists that hedge funds which starts to unwind the euro positions, and this really could be impact for the euro currency. Finally, on Friday we will get the gross domestic product release for the first quarter United States, and so really also will be the question what data we will get. So first assumption from the Atlantic Federal Bank was the 4% that they have made in January. Later they have decreased the forecast for 1.8%. Right now they increased the forecast to the 2%, 2 sharp percent. So 2 sharp is better than 1 and 1.8, right? So it's really also could be the tricky moment. So it's a lot of information that should be released very, very soon. I'm even not speaking on the Europeans on the central bank meetings in May. So Great Britain, so Bank of England meeting. So it also will be important. This is really too much factors that could impact on the currencies in the short-term perspective. That's why we see some kind of the indecision in market behavior. So speaking on technical picture, guys, we will take a look just on the short-term picture. So right now, take a look. Market has returned back to major support on the daily chart. So trend stands bearish. Market has reached the daily oversold right around previous lows. And take a look, it has back to our confidence supports 121.60, 121.72. So here, some technical response probably on the strength of this area should follow, but so a lot of will depend on what Mario Draghi will tell on the meeting, and also it will be very important what data on the gross domestic product we'll get tomorrow. But technically, usually strong support suggests at least some pullback here, some retracement. Now, how this retracement could happen? Here as we have some important details. First of all, take a look at the follow time frame chart. Here we have declared ABCD pattern is forming, but the D point stands at 121.50, so it has not been reached yet. These lows stands below this level. It means the kind of wash and rinse could follow that could grab the stops that stands below it, and after that market could reverse up. That's the very probable scenario. Currently market also is calling around the monthly pivot support one. So you can see this green line is monthly pivot support one. So we have a daily agreement in confidence because ABCD completes right at the daily confidence support. We stand at the daily oversold. This combination with the confidence support area gives us Napoli bullish stretch, and we have target slightly below the previous lows. So it means that we should keep an eye on the possible wash and rinse and fast return back. If this will happen, fast return back will follow. It will mean that at least some upward bounce will happen. Some continuation will happen. This, of course, could be triggered by some statement from the Mario Draghi, maybe on the release of the gross domestic product on Friday, any fundamental event. But that's the point to watch for. If market will break this level and will hold and keep and stands below it, that will probably suggest that no upward action will happen. This could become a real breakout, but that will happen only on some really negative signs for euro or really super positive signs for dollar. For example, if the gross domestic product will be about the 3%. In this case, yes, it's really could happen. Now, what to keep an eye on the intraday charts, on the hourly chart. On hourly chart, guys, this could take the shape of the hand and shoulders. But take a look that here market already showing some upward action out from the 127 extension of this small tracing swing up. I think that market really will proceed to the 1618 that stands at 21.45. Why? By the same reason. This major target has not been hit. Also suggests some stop grabbing below these lows, and this will push price slightly lower, so it could reach just technically by the execution of the stop orders. So market should hit it, 1618 target. Also, kind of the bearish dynamic pressure here is forming, so you can see the trend has shifted bullish, but price action is not really bullish, so not see any real reversal that should follow. If our suggestion will be correct, then indeed some wash and rinse and fast return up will happen. It's kind of the bullish engulfing pattern of a railroad track could be formed here by the Napoli term. Overall action could take the shape of the hand shoulder. So the first upward action will be back to these areas around 2250, and later it could become deeper retracement. So that's how the scenario could be realized here. Alternatively, as I said, if market will collapse here, break this level and will stay below it, that probably will mean downward continuation, that no respect will be, and that will mean that this major level will be broken, the triangle will be broken. In this case, we should be ready for the 1930. This next support stands here. So that's what we will be watching for in the euro currency within the today and tomorrow sessions.